everybody, welcome back to the channel. So the stock market sold off once again. Should you panic? Well, that really depends on whether you're long bias or whether you're short bias. If you're long bias, things are not looking too good right now. And in today's video, I'm going to be sharing with you exactly why the sell-off happened to begin with, and also what to expect next week. I'm going to be sharing with y'all a stock that y'all should be keeping in your watch list as well. And I'm going to be doing a trade recap of some of the trades that we took on yesterday and also today. All right. Now, before we begin, do not forget to annihilate the like button on your way in. And also don't forget to subscribe if you are new to the channel. All right. So let's begin. Let's dive right in. So as you can see right here, this is the SPY. And the drawings that I put on here are still there. I did widen out the flag actually in the morning. I did widen out that flag. But as you can see, this move right here, this giant move, was the one that I was expecting on that day. It happened yesterday, and we were able to actually take advantage of this move through a stock, which I'm going to share with y'all later. But as you can see, that bear flag that I was warning y'all about eventually broke down. It took 24 hours extra after I released the video. It didn't immediately fall. It fell afterwards, especially after those earnings results from Amazon and Apple. Now, with the Nasdaq, I told y'all if we broke down that 12,400 was very, very highly likely, very possible. And I'm not changing my mind. I think that we're going to get there on Monday. It looks like it wants to get there on Monday. We're breaking below this previous level of support. I don't think we're gonna see a double bottom. No, it's gonna get longer all the way down before we see some type of bounce. All right, so that's my honest thoughts on the overall market. I'm going to explain what happened here in the trading recap. I will explain that. But for next week, a stock that y'all should be keeping in your watch list for next week. That stock is, let me change this thing to the 1 minute. There we go. That stock is BAC. All right, and the reason why I want to share BAC with y'all is because of this. If you go onto the 1 hour and you zoom in right here, there's actually a bearish pennant on the chart that broke down today. It's quite clean. It's right there, right over here. All right, it broke down today. This is 11 o'clock. Right here below $36.31, and then you just kept selling off with the overall market. How low can this one go? I think it can go real low, and by real low I'm looking at, okay, we're gonna go all the way back to the daily. First and foremost, if you go onto the left side, if we zoom in on right here, we make this a little bit bigger like that, we're gonna draw this level of support which broke. This is not good. Not a good sign for longs and for dip buyers. Definitely not. And then we also got some dips, some gaps right here which have to be filled. I think it's going to drop. Like even the weekly is it's not even looking good. Like the sell-off is still there. We got a lot of bears right here in this wick. Right there. Right? And the trend is still bearish. And next week, I wouldn't be surprised to see a massive candle down. Where is the candle going to start? That is going to depend on how we open on Monday. Whether we have a massive gap down, where it opens here, and then drops all the way down, and then maybe buyers pick it up, and then there's a long wick at the bottom like that, right? Like whether we see something like this, and then eventually like starts recovering, and then it does some stuff in between. Like that's for another video. But watch for the drop. Watch for the drop. The 4 hour is looking quite good as well. It's looking good. So watch Bank of America for a potential short next week. All right. Now Now let's talk about what happened with the earnings results. As I always say on this channel, holding anything through earnings is 150% gambling. All right, and Amazon reported earnings, and they usually do well. Like it's very rare for Amazon to miss on revenue or to miss on EPS, but they reported a miss on Thursday afternoon, and the stock plummeted by like 12% pre-market, and then it eventually went down again. This reaction right here has a lot of impact, especially on the Nasdaq and the SPY, right? It's a very heavy stock. That one, along with Apple. Apple, on the other hand, again, this is why I say that it is gambling. Like holding anything through earnings is gambling. First and foremost, Apple reported phenomenal numbers. They crushed earnings regardless of how the conditions are with their company. They still came out on top, and yet they got annihilated. The market makers made this turn out to be an option killer, where the people who bought YOLO calls and the people who bought YOLO puts got annihilated. All of those contracts were dropped by like 90% at the open because of some. It's called the IV crush, implied volatility crush. It's very nasty. It's very very sad, but it can happen, and you don't know exact. It's very hard to predict, right? This is why I say that holding through earnings is 150% gambling. Congrats to those of you who may have gambled on Amazon, because those puts actually paid off. Like the ROI on those puts were pretty massive. So congrats to anybody who gambled their money through that. Now, some where is it gonna go? Let's talk about it. Where is it going to go? Since I told y'all earlier that I was expecting the Nasdaq to drop to 12,400, I would expect a lot of these stocks to also drop. Like I would expect Apple to drop all the way down to at least retest 155 again, maybe even go lower towards 150. That is what I expect. And for Amazon, it might trickle down a little bit lower. It's at 2470 right now, I think. Let's see. Amazon. Yeah, it's at 2479. It can go a little bit lower. Like when the earnings reaction is like this, when it looks like that, it takes a long time to recover. A very very long time. It happened before right here, as you can see. It didn't immediately bounce right away. And right now, with the market conditions, with the way things are, people are like chilling. They're not, like, nobody is eager to buy this like right now. Like this is not usually what you do. You let the stock chill out for a bit, right? It might take weeks, it might take months, all right? It might just trade between 2600 and 23 with 2200 all the way until their stock split, and then it's probably gonna go even lower. Again, that's my honest thoughts on Amazon and Apple. All right, now for the trading recap, let me show y'all the first one of the stocks that we took, that especially yesterday. Let's see here. Yesterday, we took a trade on AMAT. All right, and the reason why I took a trade on AMAT was because of this right here. If you look on here, it actually showed a bullish pennant yesterday, and it broke out quite cleanly at like 11:20. This is where we bought in calls, like calls that expire on the 29th, the 113 call for $110 each, right? And it was just climbing again. The momentum was just pushing the markets higher. Tech stocks were running, a lot of stocks were running. This structure was very very clean, and the costs just kept printing and printing. So it went higher, but price target on it was 114.20. I ended up selling a little bit before that, when it got close to, yeah, at 113.90. That's when I started to sell. I sold those contracts for an average price of like $190 each from $110 each. I should have I should have handled this one a little bit better. I could have waited for a long time because I could have waited for a while longer. Because as you can see, it just kept going higher and higher by like $1 more than the price target. So that was the trade. What happened the next day is that again, pretty much the whole market started flushing down. As you can see, all of these gains got given right back. All right. So that's what happened with the stock. Where is it gonna go next? Probably lower. Probably lower. All right. Now the next day trade after that was, now this is the part where I'm going to explain the /NQ. All right. So the Nasdaq showed it showed this structure along with the SPY, and I thought that the drop was going to be delayed. I thought that the drop was going to be delayed. And here's what I mean. Let me just go back on here. Let's do /NQ. So I thought that this thing was going to pop over here, right? And then run all the way and test the top over here at around like 1360. At around 13,600 before we immediately flush, whether it takes like throughout the whole day or whether it lasts for 2 days. I thought this was what the market was hinting at. So unfortunately, I took the bait. I actually got in here and I got in here with calls, and I took a small loss. I took a loss on the way back down, so I had to stop out when it got like right below here. When it got to this level, when the SPY actually, let's look at the SPY. When the SPY got to here at around like $121.70. Let me see. So let me show you. There we go. So when it got right there, like this was a fake out. This is a classic bull trap. So it happens. It happens. Like big picture, I had the right idea. It's just that it looked deceivingly good in the moment, and it happened. Eventually, I made it up with a Tesla trade. So Tesla bounced, right, and then eventually it formed this thing. It formed this structure. It looked quite elegant, and as soon as it broke down right there, I got in with the $900 puts for 550 each. All right, and the price target that I had was 880. So I was just watching it fall. It took a sweet time. Like it took a while to actually flush to at least like 890. So I was just watching it. And then eventually, like on the 1 minute, I don't usually look at the 1 minute, but I looked at it this time and it formed this right here. All right. And actually this is what, 1142. So 1142, Tesla was right over. Let's look at it. So Tesla was right here. 1142. 11. There it is. All right. So this is that little bullish pennant that I saw, which made it easier to actually like hold because the contracts expire on that day, right? The volatility of this contract is kind of like brutal, but this kind of helps. So it just kept falling downwards right there. And then at 1142, which is in this candle, this is when I sold half right here, right there. And then at 1155, I sold the rest at 8.9. All right. Eventually I got back in. And the reason why I got back in was because I looked at it from a different perspective. When you zoom out of Tesla, all right, especially after that first trade, which was right here, when you just zoom out and you get rid of these lines and you move it a little bit lower like that, you get another structure which is quite clean. And the fact that the market was very, very bearish after I got trapped in the warning, right? Despite the fact that it was bearish, it was a very clean setup, and I knew it was gonna drop. It was just a matter of time. Like, I even put out a warning that it was going to drop right over, where is it at? Right over here. All right. So this is the warning. It was just consolidating after my first exit right there, and then it was just chilling, and then eventually it followed through with the plan. It did a little fake out at like 9:05, and then started to drop all the way down into like 1 o'clock, which is when I took my second entry right over here with the puts, the 890 puts for $515 right there on the breakdown. And the price target for that one was $870. I ended up selling at 1:25 p.m. When it got to 884, like, let me look at the 1 minute. There you go. All right, so I ended up getting out at 11:25 when it was right over here for an average price of $900 again. Those contracts are right there. All right, so 11:25 in this region right here. So we got in at like $5 and right at 1 o'clock right here at 510, and then we exited at like $900. It eventually went even higher, but again, congrats to anybody who held longer. I was happy with the gains, and my day trade was to pretty much make either 100% on the trade, you know, a little less, a little more, but that was pretty much the day trade for today. And yeah, that is the end of the video. Again, do not forget to annihilate the like button for the YouTube algorithm. As always, it helps the channel a lot, and it allows more people to get this knowledge as well. Also, if you are new to the channel and you haven't subscribed already, definitely click on subscribe and click on the notification bell along with all notifications. That way you don't miss out on future uploads. If you'd like to be part of a private Discord community, you can find that as the first link in the description of the video below. If you haven't added me on social media yet, you can find me at Ngumah at PATTERNOLOGY LAB on Instagram and on Twitter. And lastly, if all of this is brand new to you, if you're interested in getting started in the stock market, I'll have some very basic step-by-step directions in the description of the video below. Step 1 to step 3. It only takes about 15 minutes or less for you to get set up with all the tools you need to start trading immediately. You can also get 2 free stocks valued up to $1,850 right to signing up with Webull using the third link in the description of the video below. Once again, ladies and gentlemen, my name is Ngumah with PATTERNOLOGY LAB, where we trade patterns only. And I will see all of you in the next video.